hit the record button. Otherwise, I will forget. I really appreciate everybody for showing up today. I'll do a quick little introduction of myself, and then I'll be sharing the screen going through the presentation. We will have time at the end for Q&A. Also, if you have any questions after, we're going to resend the recording to this out, and you can always schedule a call with myself. So I'm Trevor. I've been a big dog for about 5 years. I started out just passively investing in commercial real estate. So I have passively invested in 20 syndications. 8 of those have gone full cycle. And now I've switched over to the active side, and I'm an active investor now in 9 syndications where I'm a general partner. And for the last year, I've been working exclusively with Massive Capital, who also has Sanjay and Mike Bailey, who you know are, and AJ, who are big dogs. And we also have Jamber, Janae and Amber, I call them Jamber, and Liz are also working on this deal with me, and they might join the webinar or reach out directly to you. So I'm going to start by sharing my screen. And then when I share my screen, I always get lost and I can't see any of you. So if somebody could at least put in the chat or say that you can see my screen and we're good. Nope, I can't see you at all. Can you unmute yourselves?
I can see your screen.
Awesome. Thank you so much. I appreciate that. Now I see the chat there too. Okay, perfect. Thank you. Sorry about that. So tonight we are talking about Harris Ridge. Harris Ridge is a 506C investment opportunity. So just to make sure that you understand that 506C is for accredited investors only. If you're not accredited, you can still be here for informational purposes, but you will not be able to invest in it. Simply an accredited investor is somebody who has a net worth of more than $1 million, not including their personal residence, or has an income of more than 200,000 as an individual and 300,000 as a couple. So this is the address in Austin, Texas, where this particular project is happening. And Massive Capital is partnering with Realty One. We're actually merging with them, and they are a developer builder. So they are the ones that are really taking charge of this project, and we're partnering with them. So a little bit, we're going to tell you a little bit about the sponsorship team. We're going to do a quick executive summary. We're going to talk about the market and property analysis, and then we're going to talk about our business plan and then how to invest with us. So I expect everybody to read this slide, only kidding. So this is an investment offering disclosure. So you need to verify all of the information yourselves personally. You are responsible to understand the risks of investing. And if you've ever read a PPM, they are full of everything that can go wrong and could happen on a deal. Always investing in real estate has risks and rewards, so you need to understand both. So a little bit about the sponsorship team. So we are merged together with this company called Realty One. Realty One has already built 71,000 square feet retail. They've also built these retail centers, and these are under construction. And then they have almost 500,000 square feet of building under operations. They have a total asset of $290 million. They're a little bit different that they are a developer. So they buy land, they entitle land, they build the property, they lease the property up, and then normally they're selling the property. We're going to work a little bit different when we join them and probably be able to keep properties for a period of time afterwards. For those of you that don't know Massive Capital, we have about 36,000 square feet of multifamily, and we're trying to this is 90,000 square feet. This is X space under construction. And for most of you that are in the multifamily space, you understand 1,346 units better than 1 million square feet of housing. And our net annum is about 145 million. So between the two of us, we're getting nice and close to that $500 million mark, which is very exciting. So a little bit about what Massive Capital does. We're vertically integrated. So we have equity, we have in-house brokerage that does the leasing, we have property management, and that is not in the residential space, that is in the commercial real estate space. So they do have a property management company that manages their properties. They have a development group that develops properties. We have in-house construction, and then Massive Capital also does have an education program. So then on the other side, we have LP, institutional debt, acquisitions, leasing, retail flex space. Retail's a little bit different. Town centers are basically a lifestyle center, multifamily, and then we do have an in-house general contracting. These are all of the markets that we do have real estate investments. And as you can see, we're very heavily focused in the Texas market because most of us are based in Texas, and that's also Texas. Texas is investing in Texas, as Phil likes to say. So this is the main sponsorship team. So Shirar is not a big dog, but he's very familiar with a lot of the partners. Sanjay is, and then over on this side, we have Mike Bailey, so big dogs. And then Bo, he is the main development principal on the Realty One, and then along with Alexis and Pat. Here we have a very extensive team of all the people that are involved. So this is a lot of the people. You will really only be dealing with these front few people, myself, Jasmine, Marie, and Candace. But we just like to make sure that everybody understands. I always tease that Linda must be in the witness protection program because I've actually never seen a picture of her. And then we do have some finance and asset management within our team. So we're getting very diversified. So a little bit of an executive summary, and I'm going to go through this rather quickly because it is somewhat self-explanatory. You will get a copy of this presentation later if you want, and obviously a copy of this recording. So one of the things that was very interesting, we got this property off market. Now that sounds a little bit interesting. What does that mean? Is really the land that we got off market. Somebody contacted us, said there was this piece of land and it was in a great location. We also have location know-how. So obviously we know that Austin market very well. I'm in the Austin market, several investments in the Austin market, and Realty One has 4 ground up developments that are happening in this particular market. One of the things is we have a good price point because we are our own general contractor. Yes, we do hire sub trades, but when you are your own general contractor, you can manage your costs a little better. We're in a high demand, low supply area. So this area, and you'll see a little bit more of where it is, there is not a lot of development in that area in terms of retail. There is a lot of workspace and a lot of housing. Obviously, we're coming in a bridge to recession. So this is a really good time to be able to put your money to use when your money is done. And then, you know, hopefully we're going to go through it and then we'll be able to get all of the things done. And then a proven value add model. We've been doing this, Realty One's been doing this for 42 years, and we're joined up with them for the experience. So the location and entitlement risk. Okay, so Austin is the 11th most populous city in the US, and we all know it's growing. The project is very close to being permitted. We should be permitted in the next probably 3 weeks and start construction in the next 2 months. We have a solid upside. So we have a conservative cap rate. We bought it 6%, and then we did a sensitivity of 6.25%. And we already possibly have a potential buyer for the particular unit. We are building it at $243 a square foot all in. And competitors that are building for themselves or having third parties build them are in the $580 to $600 per square foot range. So you can see we're building this because we're doing it ourselves at a very cost efficient manner. So this is very high level of what we're going to do.
Hey, Trevor.
Yes, sir. Oh, hi,
hey, Trevor,
Sanjay.
Sanjay. Hey, sorry about that. Can I add one comment on the previous slide?
Absolutely.
Thank you. You know that $423 per square foot, that is inclusive of the tenant improvement allowance. You know, just for the construction, that dollar per square foot may look a little high, but that's an all-in cost, including the tenant improvement allowance. So, and the comparison to the other rate, that's what that is all in with tenant improvement.
Perfect. Thank you. Yeah, and Sanjay's on the road right now. Wasn't sure if he was going to be able to make it. And just for those that are curious, my first passive investment through the big dogs was with Sanjay. So we've come full circle, and now we're partners. This is an error in the top right. It is now a 506c. We did start this deal as a 506b and switched it, and clearly I missed that slide. So this is basically what we're offering is a 20% internal rate of return. So a lot of people don't necessarily look at internal rate of return. It's not a common number, but it's actually a very important number in commercial real estate investing. And it is the time use of your money, how much you've made. So if I double your money in 5 years, that's roughly a 17% IRR. If I double your money in 10 years, that's roughly a 10% IRR. So you want your time to grow quickly. And so IRR is a really good measurement of time. Our minimum investment is $75,000. If you have some discomfort with that, talk to me. If you're a first-time investor, we always like to get you comfortable with massive capital. We're projecting a 1.72 multiple of your money. So what does this mean? It means if you give us $100,000, in 3 years, our estimated return is $172,000 to the investor. The next thing that's unique about this offering is we have a 7% preferred return. What a preferred return means is that the investors get paid first. So this is very important, okay? The way we like to structure our deals is us as general partners make no money until you've got at least an accrued 7% return on your money. So again, if you gave us $100,000, it would be 7 for the first year, 7 for the second year, 7 for the third year. So you would get that money first before we make any money. Then on the opposite side, if we exceed a 17% IRR, which we're projecting to, so these numbers are all written at a 50-50 split. But if we don't achieve those numbers, we also don't reward ourselves as much, and it stays as a 70-30 split. So this is a way for Massive Capital to really make sure that we put up the interest of our investors first. So you get the first piece of cash out, you get a bigger split if we don't perform, but we have to have a carrot as well as a stick. So if we do perform well, it goes to a 50-50 split. So I want to make sure that we understand that. Also, the last few offerings, we oversubscribed. I know a few of you folks missed getting involved in Xspace and a couple of other deals. So time is of the essence to make sure that you do it. And do a little bit about the location. I'm not going to read everything here, but what I'm going to do is point out this is Highway 183 for those of you that know Austin. This is Highway 35. And so we are on the corner edge of Howard Lane and Harris Ridge. The beauty of this is, and we all know that access is hugely important for retail. So we have direct access from both streets going in both directions. We're already pre-approved. The household growth in that area is about 9.75 projected in the next 5 years. We're very close to that $45 million soccer stadium. There's a lot of existing buildings. The 3-mile daytime population boasts over 30,000 employees. So that's the daytime. That's people that are coming to work in the area. These are often your customers. There's 2,300 businesses and 6.3 million square feet of office. There's some major business park, and we'll talk about that a little bit in the next slide. So we all know that Austin is a hot market, right? The largest MSA growth, the best place to live, highest growth rate, the 5th largest MSA, 7th largest retail real estate market. So all of these things here and all of the employers, we all know Austin is hot. It's been having the greatest growth. It represents over 8% of Texas's GDP. There's been billions of dollars created, 37,000 jobs in 2019. Probably should get a slide for the 20s. So this is a little bit more overview. So again, you see Highway 35, you see Northwest Palmer Lane for those that know. This is where our site is. And if you look at this map, this is all new residential development in this area. And then you'll see some of the things here So there's schools. So we have school here, we have an elementary school here, we have a middle school here. So we have a lot. And this is the whole tech center. And then these are other retail type businesses that are all basically on the corridor. We have some locations down in this area here, but nothing on our area where we're located at. This next slide is also very interesting. This talks a lot. So again, you can see our site, and these are all of the businesses that are located within this space. So you can see there's a lot of businesses that are located. And again, you see the densely populated retail. There's about 65,000 homes in this neighborhood, and there's not a lot of retail development. So we're very, very bullish. This is a little bit about the property information. And so the goal is to have an anchor restaurant tenant, another anchor tenant here, and some other. So the total build is 16,800 square feet. Our target rent is $34 to $38. So again, obviously you get the bigger your space, slight less rent. We have a triple net lease, so they're paying about $12 a square foot. So for those that don't understand, retail is a triple net lease. The only thing us as a landlord are responsible for is the foundation of the building. And clearly, since we're the builder, it's a new asset. There's no risk at all. 100% of the operational expenses are passed on to the tenants on a triple net lease. This gives you a little bit of an idea. We've got plenty of parking in the area. And then this is the space. And the way this is done is there's a shell built. And then depending on who leases the facilities, we do to carve out the space, depending. So there'll be anywhere from 5 to 8 tenants in this particular property. And then we do have some tenant improvement. And then Sanjay mentioned that that is in the estimations from the beginning. And then the tenants, of course, come and do their final fit. This is a very, very busy slide. So the leasing target in the area is average of anywhere from $33 to $38 a square foot. Our pro forma is set at $36 a square foot. So we've tried to pick a real middle ground of a new asset that we are. And then all 2020 and new assets are selling at the high premium. This is a very intense slide. I don't know, Sanjay, if you want to mention anything more on this slide. It's a lot of numbers. Maybe we can.
Let me take a look.
Yeah.
Yeah, no, I'm returning my car, so go ahead. Sorry.
Okay. All right. Very good. So, but this, we can answer more questions later. So talk a little bit about the business plan. So we've already started this project. So we've got all the entitlement. Again, we're just about done. We're finalizing and permitting all the engineering and architectural plans. We're securing some funding for the property, which is the debt side, and then we'll get a go ahead. When here is basically where we'll be raising the money. The first 3 to 12 months, we're going to build the property, get all the subcontractors in, complete the horizontal and vertical construction, ramp up marketing to get the new tenants. And then in the second year, we're going to be finishing the leasing for 3 to 5 tenants is what they put here. We're going to be doing the tenant improvements. We're going to have a grand opening, continue to manage the property, and then 24 to 36 months, basically maximizing it. And then the goal is to sell the property and repay back all of the investors. So it is a 3-year timeline. And depending on, again, how successful we are, we feel very comfortable that we will be able to achieve this within that 3-year time frame. So a little bit about the uses and source. So the entire project is $7.11 million. So we have a senior debt loan of $4,760,000. We are raising $2.35 million in equity. So that's from the investors, from yourselves on the call. So this is a little bit, so we have a contingency of $350,000. We have closing costs, marketing fees, and legal of $140,000. This is a promote fee, $225,000. You might also call that an acquisition fee. It's a little bit different since it's a build. So again, land acquisition here, construction and leasing, $7.11 million. So again, we have financed $4,760,000. It is a 70% loan to cost ratio. So it's a very, very safe leverage. It is 8.25 fixed. The first 2 years are interest only. And then we plan to sell in the third year. One thing I want to make sure that's clear too, this is full recourse debt. So again, all the partners are putting their monies up at full risk. It's a full recourse debt. On multifamily, you don't have that as often. And so again, that shows some confidence that Sanjay's signing his life away on that bank loan. So again, we're just going to re-talk about the numbers of 1.72 return, 20% IRR, 7% preferred. If you'd like to see it as an annualized preferred or annualized return, pardon me, is 24. The exit multiple, again, 3-year exit. So because this is a development deal, it's not cash flowing. So I want to make sure that people understand that, right? You put $100,000 in, you make nothing. You put $100,000 in, and near the end of the year, we start getting some tenants, so it spits off some cash flow. Year 3, we have more tenants in, so it does spit off some cash flow for the investors. And then this is the money that you're going to make from the sale and refinance. So again, you're going to make the $100,000 back. You're going to make $71,000 here. And so the combination turns out to a 1.72 equity return. So this is a little bit about the dates. So we did all of the PSA and due diligence. On September 22nd, we officially switched over to a 506C. We have October 19th set as our wiring deadline. Our goal is to close the property on October 26th. So as we mentioned, we're on first come, first serve. And one thing I forgot to mention earlier, that retirement funds are accepted. And I want to make sure that I talk a little bit about retirement funds. So when you invest in multifamily, you can get a lot of depreciation and other benefits, but you don't get the benefit of that in your 401k self-directed IRA money because you're already in a tax advantage, so you don't get it. On a new development deal, there is no bonus depreciation, there's no depreciation, there's no anything. So this is that ideal investment for your retirement money. And the fact that getting small amounts of cash during a certain period of time is not always that needed on a 401k. So you put 100,000 in, and then in 3 years you have 172 in your account, or at least another 72. So next steps, you can scan this QR code, or we'll have the link in the thing. You're going to look at our investment package. You're going to review everything. We're going to accept you. You're going to wire your money. I want to make sure I'm clear. Money in the bank account is what seals you being in the deal. So retirement funds do take a little bit of time. And as long as we're sure the funds are in the account, we can work with you on that. So 75,000, we accept IRA, SOFR, 401k, QRP, and of course, always accept cash. And first come, first serve. There's myself in the middle. I'll be the main lead, just as a big dog, but I want to make sure that you have all of the other people that are on our investor relations team. And also Janae and Amber and Liz are also joining us on this deal. So I'm going to stop the share. Hopefully I didn't go too fast and your head is spinning. Anybody have any questions? Something you'd like me to go back over? And I think you can unmute yourselves. If you can't, raise your hand. I'll try to unmute you. Did I do such a good job? Or did everybody fall asleep?
Yes, can you re-show that last slide with QR code? I didn't have my phone to take an image of it.
Absolutely.
And Trevor, looks like in the chat there's a question.
Oh, okay.
What is the allocated TI?
Okay.
And it's about 60 to $100 per square foot. A little bit depends, and we work with the tenant on type of lease, how long, those type of factors go in. But it's about a $70-80 per square foot that we allocate.
Were you able to get your QR code scanned?
Yes, thank you.
Awesome, thank you. Sorry, I missed the chat question. One
No,
minute.
that's fine.
Awesome.
Yeah, good to hear from you, Andrew. I know we have gone back and forth. We should connect sometime soon, Andrew. So hopefully we can.
Awesome. Anybody have any questions? I did such a good job. And oh. Awesome.
Thanks, Trevor. Yeah, I appreciate it.
Oh, thank you very much. And again, we'll be sending out an email with a copy of the recording, a copy of the pitch deck. And if anybody has any questions, please reach out to me. I'll also be posting in the Big Dog Facebook group, and really appreciate everybody coming here. We love partnering with Big Dogs. It's a great place to be able to create passive income. And this is, we believe, a really good investment. So thanks everybody for showing up, and we will talk to you all soon. Thanks.
Thank you,
Andre.
everybody.